Hello tall traders and welcome back to another market review brought to you by Orbex. So we're seeing gold having a little bit more pressure in yesterday's trading after a potential break higher towards the 4600 area where we saw a test in a few trading sessions earlier than that. But yesterday's trading saw a slide of roughly about $50 to $60, which wasn't really ideal, especially when you think that bulls are going to get back into the market and potentially start moving higher. So what has happened since the conflict has began? Well, we've seen quite a dramatic sell-off in gold, even though a lot of traders thought that we were going to see more record highs on the commodity. But a lot of traders have seemed to have bailed out and have moved in favor of the dollar, when we've seen the dollar is potentially having a hawkish stance from the Fed in their interest rate decisions, and even more so probably now the fact that oil is going to start creeping higher as well. So on the daily chart, it's not looking great. If we look on the 4-hour chart on intraday, we're seeing now prices, as I said, have a bit of a slump in yesterday's trading, having a slight pickup in the early Asian session today, but we are still really subdued below 4,500 and even more so below 5,000, heading towards 4,000, predominantly more than that particular psychological area here above 5,000. So as I said, we're just waiting for the next signal now. But the funny thing is that a lot of central banks are still keeping their targets for gold into 2026. They're still expecting record highs once the Middle Eastern conflict has hopefully calmed down. We could still be going towards 6,000, 7,000 by the end of the year easily. So this is something we're going to have to keep an eye out for as we go along. But central banks still firmly are buying up gold. It's just a massive sell-off that we've seen in price action in the last few trading weeks since the conflict has begun, and a lot of traders are bailing out of their gold positions. But let's look on the flip side. On the dollar spectrum, we are now on the index breaking towards just above 100 as we speak, and we have tested that area before, moved up to roughly 150. 100.50, but since then having some firm rejection. So we're just waiting to see if prices are going to continue higher. Like I said, there is more of a bull mood for dollar, especially with the Fed pulling back on their interest rate decisions. Monetary policy really is a little bit unfazed, especially with Jerome Powell moving out of his hot seat of chair of the Fed in the next few months, and a new Fed chair will be in that position. But is that going to have any big bearing on the position of the dollar as well? So at the moment, we're just seeing the RSI creep into the overbought area, so we could have a little bit of a deterrence, a little bit of a break lower. But in the meantime, we are expecting more of a push to the upside. So this is where we are standing at the moment. But let me know what you think. Is it going to have record levels for gold this year? Are we going to have more of a stance of where we're going to go in the next few trading months? And obviously, as this conflict does get prolonged, it doesn't look like it's going to stop anytime soon. What about oil prices? Are we going to see major fluctuations in the black gold as well as the yellow metal as well? So let me know what you think. And as always, we'll bring you all the latest info, fundamentals and technicals as they come. So stick with us, stay ahead, trade responsibly, and we'll speak again next time around. Bye for now.